Patrick. Hello, Eagles. How's everyone doing? Buy everything. Weak dollar pushes up everything. Buy gold, buy stocks, buy everything. Everyone along the world? Okay, so the Dixie, I showed this line in an interview I did recently, and a few in fact, and I thought we might get a bounce off of it after we took out the big round number. But when I go to the individual currencies, except for, weekly divergence that someone brought up here yesterday, and Blake correctly said, there's divergence, but what if we blow off to the upside, which is exactly what happened. There's a little bit of divergence here, but the readings are pretty stiff up here, right around 68 on the 1 hour. So I have a hard time finding anything to fade. Of course, the pound confirmed. Then I showed this moving average yesterday, and I thought we'd get a bounce off the 200 in Aussie and then fail. Confirmed. So everything's confirming. So it's real hard to fade any of this, and real hard for me to want to short the dollar down here or buy any of these up here. Okay, so it's a conundrum. If you're not still short the dollar, what do you do? If you are, you ride it, you trail your stop, you take a little off the table. Same thing with Canada. Canada confirmed on this break down here. So there's really only a couple of candidates where we're not confirming the advance today. And one is this, S&P. First time in a long time that we're not confirming. I know I sound like the boy who cried wolf, but on the 1 hour we're not. On the 4 hour we're not. And the oil yesterday was interesting. We missed the high of the move yesterday by this high is 64.86, at least on my platform. And the high here was 85, so missed it by a point or a pip. And perhaps it's going to go for it, maybe up towards 65. Oil is not confirming on the 1 hour. That's a 4. So there's some divergence in the oil, and so much for the COT reports. Okay, if we get a new high, we could have some divergence here. So the only non-confirmations I see on my whole board are stock indexes. NASDAQ's another one, making new highs. We've had a couple divergences. So I follow a guy who said that the market won't turn until the dollar bottoms. So, unless we get a turn in the dollar here, and I know that Steve had technical levels around 88.60, which is still another 100 points from here. But I can't find a technical reason yet. I'm going to have to let it do something right. I'm not going to step in front of this today. So that's where we stand. The stock indexes are one of the only sectors or instruments that are making new highs without momentum confirming them. So keep an eye on those. And what's interesting with the stock indexes, and we all know that we've had a hell of a blow off, and I know Steve has mentioned it too. I mean, just look at the daily. Right? And then you look at the VIX. The VIX hasn't made a new low in about 4 weeks. And even today, looks like it's going to come in a little higher. So this hasn't happened in a while. Maybe marginally, there have been times in here where the market's made new highs and the VIX hasn't made new lows, but not with this much elevation. So that's what I see today. We have a great guest. He's an anonymous guy on Twitter. His handle is @BondSkew, and he is a FX trader, even though his handle has Bond in it, like James Bond. So stick around for that. I don't believe he has any service, so no axe to grind to try and sell you anything. He's just going to come here and share what he does and how he does it. So it should be a great interview. I'm looking forward to talking to the anonymous at Bonskew at the top of the hour. So let's see what the rest of the team thinks in these types of conditions, and I'm going to hand it off to Blake so he has some time to talk in case there's some news coming out at the bottom of the hour. Hi, Blake. How are you today, my friend?
Man, just watching this dollar just getting absolutely creamed all across the board. The last leg, if you guys didn't the reason why, and I'll pull it up really quick. Let me go over to it really fast. Let me grab the chart. Gold just broke out, so yeah, we're waiting for gold to kind of make the move, and gold is making the move. Here's the gold chart. Let me get over to it. Sorry, I'm kind of watching things that I'm doing here. So here's the gold chart. We cleared the 1350. This is a downtrend line that's been formed since mid last year, and we broke above 1350. So that's, you know, obviously accelerating this move. It's confirming the weakness that we're seeing in the dollar. So the dollar is just, you know, obviously getting sold everywhere. Now, keep in mind, tomorrow's a big day. You know, it's the big day for the ECB. We've got the euro that is obviously very strong here. Let me get over to intraday charts. We're closing in on the highs here on the. Sorry, I got to look at the yen here too. On the Eurodollar, but the pound's also, you know, surging. The pound is just out of control. I was talking with the office today, and we were all, you know, saying the same thing. You know, dollar looks scary, legitimately. You know, like a legitimate scary dollar move. You know, you have the Treasury Secretary says we welcome a weak dollar. Mnuchin, he said that today, and it's like, what do you do with that information? It's like, okay, well, the dollar is already weak, so that just propelled the dollar higher against so many other things. And you know, with equities strong, gold is strong, the dollar weak, bonds weak. It's like you're kind of in this you know, question mark, like, what the heck do I do now?
Buy the world, but you buy everything.
Yeah,
yen. Yeah, you're right. Like everything.
Yeah, I mean, and you actually buy yen for whatever reason, because the yen is super strong. Right. But here's the thing. It's like I agree with you as far as your assessment with the dollar. It's too weak to be bought, but it's too oversold to be sold. So, you know, you're either on the dollar, you know, short dollar train, or you're just, you know, standing by and waiting for sort of bounce to sell into. Because I mean, and there's currencies that aren't moving higher in this last leg, but that probably is just be viewed as more temporary than anything, because right now it is just nonstop dollar, you know, beating. And you can see the dollar index. I mean, we're just continuing to cream lower. We're at new lows. Matter of fact, we're testing here. I should pull up this chart here. On the weekly chart, we're testing levels that we have not seen since 2009. So this is a 2009 breakout point, and this is where we're at currently. Now, will the dollar, you know, get some sort of relief rally ahead of the ECB? I don't know if you'd call it a relief rally, but I think that euro buying might actually stall soon. But you know, what do you do? I mean, if you're short the dollar, you know, you probably are just thinking about protection now. And if you're not short the dollar and you're looking to be short the dollar, you have to wait for some sort of bounce. I mean, that, you know, like I said, you're either on the train or stand aside. You know, because trying to fade this move has been very difficult, because I've tried it, and you know, like I said, it's an easier trade just being short the dollar, but you got to wait for rallies. But it's been a pretty aggressive move overnight. Now that we're coming in the North American trade, you might see a little bit of two-way price action. I think that is entirely possible. Now, one of the other things that I want to point out is the yen is extremely weak or extremely strong. The dollar yen is extremely weak. We've broken into new lows. The triangle played out. Yesterday I didn't think it was gonna. Well, we stalled here ahead of 110.50, but as soon as we cleared 110.50, it's been all over. But the crying for the yen pairs. The dollar yen has been moving down, and in other yen pairs too. I mean, you can see the euro yen's come under pressure. The pound yen has been very strong just because the pound is exceptionally strong, and you know, the Aussie yen is basically sideways, and the New Zealand yen, you know, just kind of flat. One of the other things that I wanted to mention as well is I closed out the second half of my my euro pound short, but I closed it when we were down here at 87.50. I missed this last leg. When I got up this morning, I'm like, okay, I'm going to take it off because it was a nice profitable trade, and then it continued lower even further, obviously, because this pound's in massive squeeze mode at the moment, and I'm going to leave the pound pairs, and I didn't catch, what did Lydia say about the pound yesterday?
She thinks we could go to 150 long term.
Yeah, I think that's entirely. I think that's entirely possible. I mean, obviously the trend is moving higher. One thing I want to warn you guys about the pound is this is a channel that we've been following. This is the lower trend line. The upper trend line comes in somewhere where we're currently at, you know, roughly, give or take. So you have to start being a little bit more careful with pound longs at this stage in the game, because we have accelerated to such a point where we might start to see a little bit of a little pullback in the cable. But the cable against other crosses might be a better play versus the pound dollar. Just some food for thought, and I'll let Steve go over those. Yeah, at this point in time, the dollar is extremely weak. We are testing. I don't want to say anything more than that. We're basically testing levels we haven't seen. This is the bottom of the support zone. I've had the support zone drawn for, I want to say, since, you know, mid last year, somewhere down here. You know, somewhere through 2016, I started drawing, you know, this big support zone on the dollar index, and we're at the bottom end of it. So obviously, at this point, you have to be a little careful, especially with the ECB tomorrow. And the ECB, you know, Mario Draghi is going to have a very tough time tomorrow doing his job. He's in a situation where he's got a very strong euro, and he is trying to reduce, basically end the QE program. And even though the QE program is expected to end later this year, like I think September, I think is what the date is. I don't quote me on that, but and with all the economic data that the Eurozone has shown, in all actuality, should probably be ending that program sooner rather than later. He's going to have a very difficult time trying to do that without spurring further moves higher in the euro. Because if you look at the euro if you look at the highs at 160, okay, that was the highs from 2006, okay. We are nearing the 50% retracement, which comes in just around 125. I think that's a very realistic target, might even be realistic for tomorrow. So, you know, if he cannot engineer a weaker euro dollar through his speech tomorrow, somehow, some way, and you know, central bankers always seem to amaze me with what they have the ability to do. But if for some reason he cannot engineer a weaker currency tomorrow, there's a good chance that we're heading to 125, which is a 50% retracement, top of consolidation area around 2014. But that's a realistic expectation for this pair at this point, and I think that, you know, if you're short the euro dollar, you have to start thinking, man, this could go to 125. What am I going to do in that situation? And if you're long, you have to, you know, you have to be thinking, okay, how do I protect myself appropriately in that type of move? And like if I was long the euro dollar, which I'm actually long a euro cross, but not the euro dollar. If I was long the euro dollar, I'd probably, you know, make sure that my stops were somewhere below today's lows, because you don't want to give back, you know, all of these gains, but also have to recognize that we've had some substantial gains in a very short period of time, which could obviously disappear from a positioning standpoint, from a sentiment standpoint, just ahead of the you know, just ahead of the ECB. There might be some paring back of euro longs over the course of the next 24 hours. Even though it doesn't look like it now, it's still, you know, a possibility in my opinion. So just, you know, something that I'm paying attention to right now. Now, I want to go back over to the euro yen really quick. This euro yen, I think we have just, matter of fact, we might have just completed the triangle. Let me confirm that.
While you're confirming, Blake, I want to congratulate you and the whole FA team for being nominated Best New Contributor on FX Street.
Oh, thanks. I appreciate that. We'll talk a little bit more about that tomorrow. They are, and I'm going to ask you guys, you know, hey, we provide analysis every day for you guys. It's free of charge here, and if you guys you know, could vote for us, that'd be great. We'll have a link for you tomorrow, and we'll talk a little bit more about that tomorrow. But thank you very much, Dale. It's definitely an honor. All right, so here's the dollar yen, and the dollar yen is closing in on this 109.25, which will be the triangle completion. So we're getting really close, and I think we're probably going to see that here. You know, looks like we might see that here in the next 10 minutes, the way things are going with dollar. But that's something to keep an eye on. Also, I want to talk a little bit about the commodity currencies, because the commodity currencies, they ran in European trade. They're kind of slowing down now, because if you look at the Aussie dollar, I think the Aussie dollar can very easily, let me get over here real quick, see the 161% extension or the channel high right here. So, you know, 88.80 or so. And then just remember, we're in a channel, so you got to be a little more careful as we're approaching the upper end of that channel. Kiwi, same thing. Kiwi continues to break higher. We're at a 261% extension and closing in on channel resistance as well. So if you're long the Kiwi, you got to be a little careful here. Obviously, we're getting, you know, extremely overbought. I mean, if you let me move this over. Here the daily relative strength is divergent, but also testing recent highs. So you know, just be a little careful with these commodity currencies up here. I think the better way to trade those commodity currencies are probably through crosses. If you're going to short them, you know, buy the euro New Zealand or buy the pound New Zealand or something like that. I think that's an easier way to play them versus being long the dollar, because being long the dollar has obviously been a very difficult trade if that's what you're trying to do. So trading them through the crosses is probably the better method at this point. God, the pound, look at the pound just continuing to squeeze higher. This thing is just out of control. Hold on, let me, just a massive squeeze, very overbought, but just, you know, it's a freight train. There's no stopping it at this point. The dollar Canadian, the dollar Canadian broke through this triangle low, okay? But, you know, I have to point out with the dollar Canadian and the US dollar Mexican peso, they are not following through with dollar weakness like the other dollar pairs. And that is probably more of a, you know, a NAFTA uncertainty, where the Mexican peso and the Canadian are having you know, a more difficult time. But that also poses risk too, because if you're an asset manager or you're an institutional trader and you're shorting dollars across the board, let's say you're, you know, buying Eurodollar, buying pound dollar, selling dollar yen, selling dollar Canadian, and you look around after you feel like, okay, this dollar move has probably you know, exerted itself, you start to look at the ones that have underperformed. And anybody who's been shorting the dollar Canadian is like, okay, good, I've made a little bit of money here, but I'm not making this, you know, I'm not making the same return as I am on the pound or the euro. And if I need to peel something off, and if I need to exit out of that position, I'm probably going to turn around and exit the ones that have not been performed that well, which might be the Canadian, or, you know, the Mexican peso as well. The Mexican peso is a very similar situation. I mean, we just hit, you know, new trend lows here, but look, it's been very, it's almost a false breakdown here in the US dollar Mexican peso, which, you know, obviously if you're short, you're going to be going, you know, maybe I need to cover this one. I'll keep my Eurodollar longs, but I'll cover my US dollar Mexican peso, or the US dollar Canadian would be a very similar situation if we get back above like 123.55, 123.60, because that's where the breakdown point in the dollar Canadian was. So you got to be careful of possible false breakdowns in these if the dollar, you know, gets a bounce, and that's asking a lot. But you know, one of the things that I pointed out a moment ago is the dollar is, you know, is testing levels here. I'm actually going to tweet it. I think that's such an important chart. Let's go over to the weekly chart. Here we go. Give me a second. I'm going to tweet this because I do think it's that important. DXY testing lower and oops, shit. You know what? Did I just curse, Dale? I didn't mean to do that. Okay, that's probably a better chart. Dale, are you still there? Let's see. Of weekly support.
I'm here, Blake.
Oh, hey, Steve.
Just wanted to verify that we can hear you just fine. Obviously, they
okay.
He's you know, he's going to be back soon.
Okay. And the 2009. I think if you're, you know, because if you're short the dollar, this is, you know, pretty important support. Let's see, got this all typed out quickly. Okay, I'll tweet that out. Yeah, I just think that's really important support. And then we have to be cognizant of it, and especially ahead of an ECB meeting. I think you got to, can we break through that lower end of the support zone? Sure, we can. Especially with gold breaking higher, but if you are short the dollar, I think you need to be, just more, have a little bit more situational awareness at this stage in the game. And also, you notice that the relative strength is divergent, which you're divergent going into an oversold situation, which is, you have to obviously be a little careful with that. So. But anyway, well, Steve, since you're here and it's about that time that I pass it over to you, how are you doing today?
I'm good, Blake. How have you been, mate?
Good. Just watching this dollar destruction. How do you feel about it ahead of the ECB?
I think that if the ECB doesn't do a very good job, I mean, throwing the sink in the dovish commentary, the euro is going to explode higher. In essence, more or less. Following and closing the underperformance gap with the pound, for example.
Yeah. I mean, it's entirely possible because the pound has just been out of control strong, and like I said, I think the euro could easily see 125. I don't think that's much of an issue.
I have a friend, he's Bulgarian, George Stoikov. He tweeted it a while ago. He said, and I completely agree with that assessment. He wrote that a lot of the move higher in the pound is purely fueled by stop losses, and we can see that very easily because we get like 20, 30 pip jumps. You know what I mean? I really think that still, I mean, the sentiment has definitely. We can see that in the DSI as well. The sentiment has been hitting 90. It's at 89 during the past 2 days, but that doesn't mean that the market was still at a big extent wrong-footed. You know what I mean? Especially longer-term positions and big positions were short following Brexit, and I think that this move has accelerated mostly because of that. Anyhow, you warned people. What was it? Two days ago? Was it on Monday that you said that if the pound breaks above the 139.50, 140 area, it's gone afterwards, and that's exactly what it has done, right?
Yeah, I mean, it's just because you're right. It's just triggering stops all the way through this move.
Yep. Exactly. And yes, the dollar has been very weak. In my opinion, since we penetrated the head and shoulders target at 90.10, the next real big confluence of supports is at 88.50. We have there the 61.8 of the major dollar bull move that we had starting in 2014. We also have the 127% extension of the last corrective move that we had in the end of 2017. I think more or less that might act as a magnet. The question is there any chance that we're going to get like a big push lower in the dollar tomorrow following the ECB and then get a reversal? Because we've seen quite often this kind of moves, right? Like an exacerbated move, getting one last push before then reversing and catching people off guard, especially short-term positions. I'm not obviously talking about like a major reversal in the dollar that's going to propel, it's going to fuel a new bull move in the index, but I think that it's definitely time to see some kind of a corrective move higher in the dollar, and with sentiment and positioning being so extreme now, if that happens, I think that it might have some legs. I don't know how you feel about that.
Yeah, I think it's entirely possible. I think if the Eurodollar reaches 125, I'd be more of a proponent of being a seller. But what I'm hoping for, and I think most of us could probably say the same thing, is I'm hoping that that Draghi try to push the euro down and we get to 122.50, and then do this, get a move like this as he tries to push the euro down, but ultimately becomes successful, and we play it to the long side. I think that's how I'd rather play it than try to short the euro at 120, because if it's in 125, it's going to be pretty extreme as well. But I'm willing to do either.
One last thing before you go, if you have half a minute, what I was saying in the chat room as well, and I wanted your feedback as well, is I strongly believe, and I'm going to be doing that, I think that the Fed is going to start panicking that it's a lot behind the curve, because this dollar move lower, the parabolic move in stocks, and most importantly, financial conditions have eased too much lately. If you've seen the charts, etc., I think that the Fed is going to start feeling extremely pressured to do something about it, because the situation is completely getting out of control. I mean, suddenly and within a few months, the Fed, a lot of people were actually judging the Fed last year that it's putting the cart in front of the horse, but suddenly the situation seems to have been completely reversed, and the Fed seems to be completely behind the curve. And I honestly believe that at the very least, initially on the aspect of commentary, the chances of hawkish surprises have increased substantially during the past few weeks. I don't know how you feel about that.
Yeah, but with an incoming Fed governor, I mean, we're probably, I would say, several weeks away from that type of commentary, especially as Powell tries to get his new,
due to the transition, you mean? Yeah.
Due to the transition, try to get everything in order, and all of his Fed governors then align, singing the same tune. So we might be a month away from that. So even though I think that could be a risk, I don't think it's near-term risk.
We'll see. We'll see.
Yeah, that makes sense. But all right, Steve, I'm gonna get going, and guys, good luck today, and thank you all for being here. I'll see most of you in the chat room in a few minutes.
Okay, perfect.
Hi, Steve.
Dale, you sound far away, mate. If you can come closer to the microphone.
I'm so far away.
There you go. Yeah. Now we can hear you perfectly fine.
All right, buddy. How are you?
How have you been?
Okay, so that 88.5 level you were talking about several weeks ago, maybe even a month ago, looks like a done deal.
I posted an intraday update yesterday saying that we're poking the triangles. Here is the DXY that I'm showing, that we're poking the triangle. I mean, this was so textbook bearish consolidation, right? I mean, when you see an instrument stall in such a manner after a clearly defined move to the downside, it could have been to the upside. It would be just the opposite. It's signaling that it's going to break the direction of the trend. It's what we've said about triangles, and today it confirms that with without leaving any doubt. So since we actually initially stalled a little bit when we hit the head and shoulders target, breaking below it, in my opinion, it leaves very little chance that we won't hit the nice confluence of supports at 88.50. Coincidentally, from an Elliott wave perspective, if you remember, Grega, due to Elliott wave measurements, etc., was also more or less targeting the same area. So for me, it's going to be a very interesting thing to see what happens from there. But Blake said it in a sentence, and I 100% agree with him. I can't really understand why somebody would want to be selling dollars here, because reward to risk makes no sense. But on the other hand, it's very hard fading this very, very strong move. It's very, very dangerous. So you're either short the dollar or you should be waiting for a good reason to be long the dollar. So you need to be careful. And I'm saying that very, very well knowingly, as you know, that I was short the dollar for a long period of time against different currencies, but lately I have been trying to fade that. And I'm in danger today of getting stopped out in two of my positions. Actually yesterday, by the way, I sold when we had the rebound in the USD MXN, I sold MXN at 1873. So at least, that's making back some of my losses. I'm already more than 1% in the money within a few hours, just to show how strong this move has been in the dollar. I mean, I've made like 1% in this trade. I shorted it yesterday night, European hours. I wrote it in the chat from the moment I did it. I did it actually when this candle was looking like it's going to fade and going to become like a shooting star or a gravestone doji, because I was also monitoring this channel. So yesterday I just shorted it at market immediately when I saw this move being faded, because I strongly believe, as we were saying yesterday, that this break below this channel will trigger at least one more leg lower in the USD MXN. So I'm actually at least making 1% back from that, but today most likely I'm going to have to take losses in my attempt to be short the Aussie USD and gold. Depends on how we close on the day. So these two trades are going to eat up all the profits I made from the USD NOK, and hopefully I'm not going to end the month negative. It hasn't happened to me in many months, but it's in the game. But I'm going to make a good attempt. But I'm going to tell you one thing for sure. I'm not over trying to be long the dollar, because I honestly believe, as I told you, that we're going to get some kind of a trigger soon, and we're going to get a big snapback rally here. I'm an advocate. We wrote a blog post explaining that we believe that the dollar move lower is going to resume, but we don't believe it's going to do it in the manner it has been doing it so far. And I'm strongly a believer, and I have a decent experience in the markets, that these moves that we're seeing now, both in the dollar and the stock markets, are unsustainable. I mean, they're so unsustainable that, just to give you an idea, the Nasdaq's trajectory to the upside imply a year-end level of above 14,500. So the trajectory we've had so far in Nasdaq this year would imply that the Nasdaq would increase by around 135%. The trajectory we have in the dollar would imply something equally unrealistic. And in the economy, there is what we call stabilizers that come in and play a role on their own. For example, we have the dollar depreciating in a very rapid speed. That will definitely force inflation to pick up. That on itself is going to reinforce the expectations for Fed rate hikes this year. As Blake mentioned, perhaps the Fed will not respond immediately, and the only reason that might happen is because we have this transition at the head. I wouldn't exclude it though, because I strongly believe, I mean, I have a background in economics. I strongly believe that Fed governors that are seeing these moves must be extremely troubled at the moment, because everything says here that a lot of things are overheating, and the Fed suddenly feels like having fallen a lot behind the curve. And trust me, it's at their best interests not to let that happen, right? Yes, Elio?
Sorry, didn't want to interrupt. I just wanted to.
No, absolutely, no problem. That's why we're here. To exchange opinions, right?
Yeah, of course. I mean, since you're talking about.
I'm sorry, still, I forgot to bring you in right away.
No, it's okay. Don't worry. I've been out. I just came back 5 minutes ago, so that's fine. I wanted to say that in light of what Steve's saying, which, by the way, I agree 100% with, we don't have to go very far back. Just look at what happened in the UK with the sudden depreciation of the pound. I mean, it was already starting before the referendum, but after.
Exactly. That's a great example of natural stabilizers coming in from the economy. Yeah. Exactly.
And we saw only a few months later, you saw inflation ticking up. This doesn't take long to happen when it's currency driven. It doesn't take long. So this depreciation in the dollar is already big enough and fast enough that it's going to have an effect. And when that happens, like Steve very accurately said, the Fed is going to be in a corner. They have to do something. They can't just let the dollar depreciate to really ridiculous levels. They have to do something at some point.
Still, in less than 13 months, dollar is down almost 14%. That's a huge move.
There you go.
Huge move.
The pound
Huge.
depreciated. The pound depreciated 15%, so basically the same thing. And there was a huge trigger for that. There hasn't been one for the dollar. I mean, obviously, there's reason why it's been depreciating, but it wasn't like with the pound. So I agree with you. We're going to see eventually these automatic stabilizers coming in, and we're going to see inflation. And so the Fed is going to have to do something at some point. So,
and don't forget that we're talking about an economy that's been doing better for many years. The labor market has been, definitely tightening.
Yes.
Now, okay, it's debatable in what kind of an extent, because then the conversations about participation rates come in, etc. But there is absolutely no question that unemployment is very, very low in historical standards now.
Yes. Growth is picking up not picking up, but growth has been very robust. You have 2.5%, 3%
for a developed economy. For a developed economy in 2018, it's been decently robust. Yes, exactly.
Yeah.
So all of that should spill into the markets at some point, and people should wake up and realize at some point that wait a second, we are all bearish the dollar here, right? We're all extremely bearish the dollar. The dollar has depreciated, let's say. Now it's almost 14%, let's say 15%. When we go to 88.50 or whatever, it's going to be close to 15% and etc. And, the Fed is like, oh, is the Fed actually going to hike more than we expected? Is the Fed going to start, signaling? If you've seen one by one the Fed governors in the latest, whenever they've spoken, the vast majority of them say at least 3 hikes are needed in 2018. You've seen that?
Yes, my friend, yes. And the market is pricing just over 2.
Yeah.
So there's already a gap there, which first needs to be filled, and then
Exactly.
maybe the market will imply more. So yeah, I agree.
Exactly. So currently, we have a very clear mispricing of the risks for the path forward for the dollar. As I wrote in the chat room, and I absolutely mean that, I'm going to try to fade the dollar again when I see some kind of a reversal. But regardless, before every Fed meeting that follows from this point on, and until I say otherwise, until I say that, in my opinion, conditions have changed and now the market is more accurately pricing what's happening in, I'm going to be shorting the dollar just before every single Fed meeting, because I believe that for every meeting that follows from this point on, and until I tell you that I believe that this has changed, the risks are tilted for hawkish surprises. I mean, I believe that my chance of losing some money because the Fed is going to surprise the dovish side is minuscule in comparison to the opposite possibility of the. Yeah.
Sorry, just think about one thing. What has been the main issue with the Fed so far in 2017 and 2018? It's inflation, which is below target. That's really the only problem with
they don't have anything else to use as an excuse. Yeah.
They have ups and downs in everything, obviously, as every country does. Not every piece of data comes in strong, but overall it's been decent. But the problem always people are saying is how they're going to keep hiking with 1.4% inflation. Well, if that starts going, to 1.6, 1.7, 1.8, that's it. They have a free hand afterwards to keep going a little bit further. So just something to keep an eye on, because I think it's going to start creeping higher.
Stelio, can you do me a favor as we speak? Because Bill asks something that is, before we see charts, and we're going to see the technical charts, but there are some things that I really believe, guys and girls that are listening in here, that you should hear about and you should see, because it will put some things in perspective whenever you trade, because you always need to have your eyes on on the big picture as well. Bill is saying the following: how is that the Fed is the only central bank currently raising rates, but USD getting destroyed? Yes. It's not the only one, but it's one of the few ones. I would agree with that. Stelio, can you please find me dates? Can you please find me the following dates so I can show something? QE1 start, QE2 start, QE3 start, and QE3 announcement that it ended. I think we announced that we're ending QE3 end of 2014, right?
All right, I'm just finding it now. Okay. Okay. So QE1 started in 08, December 08. QE2 started November 2010. QE3 started in September 2012, and it ended.
QE2 started when did you say?
September 2012.
September 2012. Yep.
Ah.
Go ahead.
Hold on. And then they had the twist, didn't they? Where they
forget the twist. By the way, this is September 2012. Announcement of QE2. Look what the dollar did. Tell me about QE3.
The end of it. Hold on, I can't find it.
The announcement of it,
sorry,
to begin with?
The announcement was September 2012 of QE3. QE2 was November 2010. Yeah. I mean, the answer to Bill's question is not when they're hiking. It's what the market starts pricing in. So the Fed is hiking and has been hiking in 2017.
That is when they announced QE2. That is when they announced QE3. Okay?
Yeah.
So you see how tricky the market is. The last QEs they announced, I remember that. Everybody was like, okay, now the dollar is going to be destroyed. And the gold, the dollar just, appreciated, as simple as that. And then, we found the top when everybody was super bullish here at the very, 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 very first day or second day, whatever it was, trading day of 2017. Everybody was like, okay, the dollar is going to fly even higher from here because simply, the Fed is more hawkish than anybody else. And look what happened. And now,
what hike was that at the top, Steve? Do you remember? Was that the second or third interest rate increase by the Fed? At
something like that. And we started dropping after that. And now we are in the exact opposite situation. Everybody is writing off the dollar. Everybody. It's like, oh, the dollar is going to be destroyed. I mean, the dollar is going to, I don't know, you've started seeing titles about the dollar disseminated and the dollar being junk currency, etc. And guess what? These are the titles you usually see close to a bottom, and I'm not talking about all-time bottoms or highs. I'm talking about,
I could remember a very important low in the dollar when McDonald's started doing commercials saying the dollar is down, and they started their deals. They would talk about what the dollar could buy at McDonald's. But even McDonald's started talking about the dollar is down. So look for that. Look for some fast food chain to start talking about dollar weakness.
Same about gold. Be careful here, people. If you remember, I said yesterday very specifically that I would be, I'm seeing and we were actually on the lows of the day yesterday when I said that. We were in the middle of this triangle, and I said, be very careful because price action here tells me, and I told you I'm going to tell you that regardless that I reduced my position with no cost, but I was still holding part of my position, and I still am. And I told you that be careful because price action tells me that we want to pop higher from here, and we will likely do at least one more high before a deeper correction lower. And that's exactly what happened. But I have to tell you, be very careful here because everybody's getting along the precious metals as well. So the situation, as I told you, it's very much exacerbated. The moves have been very, very, very extreme. And I really think that perhaps today, the ECB is going to be the trigger or whatever. But very soon, one of these days, we should see some big moves in the opposite direction of the one-way trains that we've had the recent days. Anyhow, let's start looking at a few of your questions. Blake already covered the pound. I have nothing much to say here. The next big target for the pound is the 143.55. That's the 78.6 fib retracement from the pre-Brexit high that we had. Obviously, the pound is extremely overbought. The sentiment is also extremely elevated. Yesterday and the day before yesterday, DSI was at 89. By the way, speaking about the DSI the day before yesterday was 96 for SPX and 97 for Nasdaq. I've never seen such extreme ratings ever. They fell a little bit yesterday, down to 91, I think, something like that. But still, I mean, we're talking about extreme readings. Also, as I told you, the implied appreciation that we have so far, just to put it in numbers and not in percentages, in nominal numbers, currently, not currently, let's say, Nasdaq started trading this year at around 6,400. The implied appreciation rate here says that if we were to continue like this, the Nasdaq would finish the year above 14,500. I mean, the way things are happening in the markets during January make no sense. They're completely unsustainable moves. They're moves driven almost exclusively by sentiment. And moves that are driven exclusively by sentiment are moves that sooner or later get reversed. Okay, it's hard to time how to do that. And I'm not suggesting to people to try to do that. I'm just telling you that don't expect or don't start building positions on the premise that the kind of moves you've been seeing in January so far are going to be the theme for the rest of the year. They're not. They can't. Mathematically speaking, they possibly can't. Okay. Target I'm watching ahead of the ECB is the 124.25, 26 to be exact. It's a 161.8 extension of the move lower, and obviously a big target after that is almost at the 126 area. It's the 61.8 fib from the big move lower that started in 2014 for the Euro USD. Okay, I remain bullish. I've never lost my bullish bias in the Euro USD. I was calling for Euro USD to that it was bullish down at 105, and I still haven't changed my mind because it's the opposite of what I was telling you now about the dollar. I strongly believe that the market is completely mispricing what's happening in the European Union and the Eurozone down here. But obviously, I have to tell you that you need to be cautious here because the easy part of the move for the Euro USD, a big part at least of the easy move has been already done, which means that do we have more upside? We likely do. I see nothing bearish with the Euro USD. But is it going to be like a one-way street from this point on? I doubt it. I doubt it. So this is not a time for you to be looking to throw in the sink, going with the recent trend. It's rather more the time of being nimble, taking positions more cautiously. And if you want to be short a dollar, which makes sense, don't do it here. Do it after pullbacks, right?
Yes, right, Steve.
Something I wanted to show, because I know that a lot of people are asking about the euro and the pound crosses. And the one I was less cautious about, because it was more than obvious, we talked about it several days ago, was the pound Aussie. Because the pound Aussie had a clear signal that it had one leg higher, one more leg higher, which I said so, because we had push higher, triangle, and another push higher. I told you that in this one, I expect another push higher to test this area that we're currently testing as resistance. Okay, so what I'm trying to say here is that the pound Aussie was the easy trade between the four of them, meaning Euro Aussie, Euro Kiwi, pound Aussie, pound Kiwi. That was the easy move because we had strong move higher, triangle. Triangles are, very clear formations. But there is also a chance that we found the bottom. There is a chance. We're going to know actually if we break below the current level. And there's something else I want to show you here. And it's on a 4-hour chart. Something that increases the likelihood that we might have found the bottom. I'm going to wait for confirmation, but it's this thing. Right? Inverted head and shoulders, broke above it, above the neckline, came down, retested it, driving higher once again. So if this proves to be a 1, 2, and this leg higher ends up accelerating and ends up not being an A, B, C, but this being a wave 3, which is very, very likely. Why is it very likely? Because the prior move higher was definitely a strong move. right? At least in its time frame, it's somewhat impulsive. Okay, so this ending up being a wave 3 again is a strong likelihood. So I think that if we clear this area, let me mark it on the 4-hour chart as well.
Hey, Steve.
This area. Yes, mate.
Can you extend that that up channel you had before we went into the head and shoulders, the bottom uptrend, and see where that comes in?
I'll tell you without extending it. Will come somewhere there. I can extend it like that, so I don't have to.
Okay. I was just curious. Yeah.
There it is. At the 78.6, roughly.
Okay.
At 178, it comes.
Okay.
Might act as a resistance, you're right, but either case, you know, there is more upside. But for me, as I said, for me, it's all about this. I want to see the momentum of this leg to know if this is a new impulse, okay? So far, so good. If this is a new impulse, I'm going to be looking for a pullback here to buy, okay? Good. Okay, let me also show the USD MXN and why I sold it. And let me tell you my targets as well, because I always want to give you updates about, you know, what I'm doing. This is what I was looking for. When I saw this move being faded and the weakness of the dollar, I sold it. I don't have like long-term outlook for it. For now, I would like 1840 is a very nice level and a very nice confluence. Perhaps a little bit higher, 1847. We have the 200 DMA there, and you know the upper part of this horizontal support zone. So at 1847, probably, you know, I sold that. As I told you, I sold at 1873. So that's already going to be at 1847. It's going to be almost 1.5% profit. It's going to be 1.4% profit. I'm going to let half of it go there. So if that works for me, at least I can recoup like what I'm going to lose from the Aussie now. What happens with the stocks and gold? You know, it depends. You know, if it's going to be enough my USD NOK to cover. But we still have some days in the month. We're going to see what's happening. I'm still a proponent that a reversal in all these moves should come soon. And you know, I'm not going to be afraid to try my luck once again, because I have a very strong belief that, as I told you, that these moves are unsustainable. Perhaps, though, because I believe in seasonality, perhaps there is a chance that the moves can go on for another week and see some type of reversals at the very beginning of the new month or at the very end of this month. We've seen that happen very often, right? And I'm not going to stay in positions until then. I'm just going to, you know, just try my luck again some days afterwards. Regardless, ECB is going to be very important tomorrow for the dollar index as well. And we take it from there. Let me see what other questions. Yeah, tell me, Dave.
Someone that's watching our webinar sent me the link to the McDonald's commercial.
Really?
Yeah.
Show to me.
Here, I'm going to put it in Skype and you can show it to people.
Yeah.
Anyway, it's hilarious. And if you go, I don't know the date when it was produced, but it did mark a significant low in the dollar. Here you go. I put it in our chat.
No, I see it. Yeah. I'm going to do that.
All right. Anyway, we do have Bonsky in the house whenever you're through wrapping it up. What a great day to have you in the house. So.
It's in free fall. It's pathetic, he says.
Put the link in the room. Let the people see it.
Hey, are you fixed on price, bud? I'm good on price. Thanks, Dave. That's cool.
It's from the Macro Game as his Twitter handle. I think his name is Nick. Is that you?
Okay.
Nick?
Let me show you. Let me show you this. From The Economist. I remember that. You see the strong dollar here. When
Yeah.
do you think this article was written? Tell me.
Late last year?
This article was written December 2016.
At the time.
Just a month before the dollar actually topped out.
Yeah, I tell you, George, you know, I know he had false teeth, but I didn't know they had steroids back then.
Yeah, and that's exactly what you should expect. That's exactly what you should expect. These kind of titles about how strong something is, about how unstoppable the markets, etc., you always see them rather close to the top. Of course, they cannot be perfect indicators, but they're decent indicators. I mean, for example, this one was written 1 month before the dollar topped out. So somebody that would have been saying this is a contrarian indicator, they could have been mocking you for the next month. But then what happened within a year? We depreciated 14% so far, right? This was actually written 28 days before we saw the top in the dollar. That's what you usually see. You know why? Because reporters and analysts, they, you know, price creates its own narrative. And the only thing they do is they see price and they try to extrapolate the price movements they've seen to what should be coming in the future, which is
They're
all
reporters. They're reporting, they're reporting what's already in the market.
Exactly. They're usually reporting what is already a fatigued trend. That's the exact definition of what's happening. Okay, and I'm saying again, so I don't get misunderstood. We wrote an article. You can go to ForexAnalytix blog. We wrote an article about the dollar's move lower continuing this year. But we wrote that the move lower is not going to be a one-way street. And so far, for this month, it has been a one-way street. But trust me, it's not going to resume like this.
Let's see what you think.
Yeah. Okay. Who do we have on an interview today?
Anonymous, Twitter handle @BondSkew.
Okay, perfect. So I'm going to leave you to. I don't want to belabor more. We've already exceeded our time for 3 minutes. I'm going to see the rest of you in.
I tell you what, listening to you and Blake every day, man, I think, and I've listened to a lot of people. You know, I've done almost 1,000 interviews, Steve, and I think we have the best content in a free webinar on the net, because I learn something new and see different things from you and Blake every day, and I'm a veteran. So really great job, Steve, every day, and you know, admire your views, and Blake, it's great to work with people that are better than you. That's all.
Thank you, Dale. You know, it's an honor for us working with you. You know that.
Thank you, buddy. So I think we're going to have a great interview. You know, BondSkew.
Looking forward to it.
All right, BondSkew, I'm going to make you the presenter. So looking forward to this interview. I have for quite some time. So you're going to have the mic and be able to share your screen. And what a great day to have you, with dollar collapse and a continued melt up in equities and collapse in the yen. And I know you trade Forex because I've been to your blog or your website. So looking forward to hearing your voice.
Thanks for having me on, Dale. Appreciate the invite.
Oh, Skew, great to have you. And you know, you can share your screen. There's a little option there if you want to show your setup and things you're looking at. Great. So why don't we start with your handle? Why BondSkew?
Well, it's not really that interesting. It's just something that I happened to pick up that I thought looked all right. It was short. I trade options too, so and I like interest rates a lot, so I just mixed the two.
Okay. And why don't we go back to how you got involved in the trading business, how long ago it was, and a little bit about, you know, what it was like for you at the beginning, and if you know, the ups and downs, God bless the broken road that led you to where you are now. What was it like for you? Did you have any mentors, or are you pretty much a self-taught guy?
Yeah, for the most part, I'm self-taught. So how I kind of fell into this. It's kind of a long road, so to speak. It kind of goes all the way back to when I graduated high school, because I would have never ended up in the military. I might have probably never would have ended up trading in the markets, because it was the main reason I ended up picking up an Economist magazine, because I happened to be in Iraq at the time, and we was in this little pop-up shop that they have for us, because it was the beginning still. So there wasn't like an infrastructure built out like there is now. And I happened to, you know, I was curious. I was like 18. I'm like, what the hell are we doing here? Yada, yada.
Right.
And I picked up an Economist magazine because it had like a barrel of oil out there, and I already knew Iraq was some type of oil producer or something. I didn't really know anything at that age like I do now.
Right.
So that was kind of what put me on the path.
That's interesting. So you found out why you were there by picking up the Economist magazine, because
that's when I started connecting the dots for sure.
Okay. Because, you know, before we went in, Saddam was threatening to only want to get paid in euros. So, you know, part of it was hegemony. And before we go on, I salute your bravery for being over there. You know, maybe it was naivety at 18, but
for sure.
Wow. You know, it definitely, when I was 18, I was in a dormitory in college, hoping I'd get a high lottery number so I wouldn't have to go to Nam. So I always appreciate the courage of people that, you know, were willing to do something like that. So, you know, that tells me that, you know, you need courage to trade too, don't you, Bonskew?
Right, for sure. For sure. And I think this is probably trading is a little more difficult than just following orders, right?
Mm-hmm.
Being in a combat environment is maybe similar, but the ramifications are slightly different. So it's hectic, but not as hectic.
Okay, so what are we looking at? GEZ 2017 to 18.
Oh, yes, you know what? I was actually going to update this. This is just a spread. I like to look at Eurodollar spreads on occasion. And I usually look at them a year apart. Not for any reason in particular. It's just what makes sense to me.
For people that don't know, that's it's not the euro currency. Yeah, they're like what, 90-day deposits in Europe, some type of instrument that was created. Go ahead.
In plain English, they're basically futures for CDs.
Okay.
That you would like get at a bank. A 90-day CD is they're the maturity of 90 days. So that's basically what it is. Not what it's called, because you can keep them overseas, and just because of that, they let them be called euro dollars. But it's just wholesale loans.
Okay, so is this the spread, or is this the rate right here at 0.2675?
Yeah, this is a 26 basis points right now, basically. 27.5 is what it's saying.
Okay.
So it's just the 2018 December contract versus the 2019 December Eurodollar contract. So you're just going to take the difference of the two. And this is a normal curve for now. So that means that as you're looking at it in a yield curve chart, the rate should
go, the higher the rate is.
Correct. It should be a normal curve to some degree.
Okay. And have you ever seen backwardation where, you know, possibly in your career where you've seen squeezes on liquidity where the front month is stronger than the back?
Within months. I mean, you got to think back to 2008, right? That was just, you can't even really throw that in a data set and think it makes any sense. Because you know, that's something that unless you're just positioned the right way beforehand, you're not prepared for. Right.
Okay.
So you know, I wouldn't want to be the guy caught trading spreads in something like that, personally.
Okay. I remember an old spread that used to be a flight to quality spread called the TED spread. between T-bills and
Right. Yeah. By the time I got involved, that was no longer a thing. By the time I got involved into the business, that was no longer a thing.
Just on the pure rate, having short-term rates gone from like 0.5 to 1.5. So I know this is a spread. So having rates tripled as well on the Eurodollar in the last.
Pretty much, yeah. Yeah.
They tripled, huh?
Yeah. I mean, it's been pretty crazy. Here we have a 2018 June contract. And if you want to look at it from a rate point of view, we can just take this and subtract it by 1. And
so I get this
did
question
that right.
a lot. And
so this is the rate point of view because I just inverted the chart.
Oh, okay. All right. So yeah, they have. It's been a dramatic move to the upside. Why is it not supporting the dollar? A lot of people thought that when we had this bear move in treasuries and even short-term instruments, it would be supportive for the dollar. What's your view on the smash that we're getting in the buck and the rally we're getting in everything?
Right. So I think what people miscalculated is the fact that bet matters. People like to think it doesn't matter, but it does. If it didn't, you know, we wouldn't have capital markets because everything would just be free. So, you know, people like to think that doesn't matter. So what we're currently seeing right now is the world saying, yeah, we don't really want your dollars. And it's, and the funny thing about it is that people miscategorize what these politicians say. I don't know where people get this strong dollar policy idea from, but since at least the Clinton administration, I mean, I was a kid at that point in time, and I can still remember this, and I didn't know a damn thing about markets. There was no such thing as a strong dollar policy. Like, there just wasn't. The dollar went up until basically 2000, and it hasn't gone up since. It's, you know, that was like the peak. And that was like the tail end of the Clinton era.
5 or something like that on the dictionary.
Right.
Yeah.
Right. That was the tail end. Let me find it. I know I got it in here somewhere. I'll look at it on occasion. Maybe I don't. I'll pop it up on here real quick. But yeah, it's just, you know, you gotta just look at the bigger picture. You know, you can't really get caught up in ideological notions when it comes to these markets because they don't care about your opinion. And full disclosure, I don't trade based on my fundamental point of view. I've gone through a major process and having to let that go because that doesn't pay the bills. Period.
Right.
It really does not.
Price is always more right than our opinions.
Precisely. Always.
Okay.
Every day.
So let me ask you, what instruments do you mainly trade, Skew?
Mainly trade futures, contracts, and FX spot. And I'll trade
I remember when I went to your site, you were talking Euro pound.
Right. I do trade currencies a lot.
Okay.
I mean, I have to. I feel like if I don't know what's going on there, I don't know what's going on. That's just the way I look at the market primarily. My favorite pairs to look at are the Swiss franc yen. I mean, these are just weird pairs that nobody. I like to look at yen crosses primarily.
Okay.
Euro yen is a personal favorite. Just because Aussie yen too, it's very telling. You know, anything. You know, these currencies, they tell you a story. I'm not the type of person that looks at just the equity market. I know most people start out like that. I didn't even start out like that. I started out looking at the currency markets because my experience with finance has been more, you know, before I got involved, was more tied to currencies than with anything else. I didn't really know anybody trading stocks or anything like that growing up. I grew up in the Bronx, so you don't really see anything like that. The most I knew about was my mom did work at a bank, which no longer exists on this side of the world anymore. They're strictly in Japan now after 9/11. She worked at a bank, and prior to that situation, she did work at Wall Street on the floor with as an accountant. So she was basically a fund accountant for a big bank, for their floor traders on the street, in the actual Wall Street Tower where the floor was.
Okay.
So
Cool.
that was the only.
Did you ever go visit your mom on the floor?
Yeah, not on the floor, no.
Okay.
But I did go visit her at the World Trade Center. Which was, you don't forget that entrance. I mean, if you've ever been there, that building was crazy. It was like the whole entrance was just marble, the whole lobby. It was crazy. It was like 2 stories of straight marble. It was phenomenal. But I won't.
Let me ask you this: when it went down, was that your inspiration for joining the service?
Negative. I'm not even gonna sit here and bullshit on that one. That's a negative.
Okay.
Yeah.
Okay.
No, it wasn't.
All right.
It was not. A lot of people like to ride that.
A lot of guys did.
Yeah, a lot did, but a lot of people like to ride that too and use it. So I don't.
Right.
Yeah, you gotta just really be careful with that kind of stuff, because
Okay.
it's too personal of a thing to ask some people, and some people just lie about it,
Right.
flat out, which is crazy. I don't understand the purpose of that.
A lot of people want to embellish their lives. So, do you mainly scalp, skew, or do you have any type of, do you swing trade? What's the time frame for opportunities for you that you mainly look for?
Right. So in FX, it's mainly weekly. So I like to ride the wave in FX, so to speak. I don't like to make my life too difficult. I've went from a guy I'm kind of a counter trend trader, primarily because I like to look at things from the top down, and not just economies, but also markets. So I'll start at a monthly time frame like I am now. And if I feel I need a bigger point of view, I will go out to quarterly or even out to 1 year. I do not care. I will try to get the proper point of view. I try to give the market structure. So I'll go from a 1 month to a 1 week just to see if I see anything that I didn't see in between the monthly and the weekly. I'm just basically comparing what I'm just trying to reconcile time frames. Do they make sense?
Okay.
And that's
and
like
the
the
right
biggest.
hand corner, is that a market profile with the green and the red?
Yes, it is.
Right. Okay.
Yes, it is.
So, what are you seeing in Aussie Kiwi here?
Well, right now it looks like it's just gonna bounce in this range to me.
Okay.
Doesn't really look like
major support right here, isn't it?
correct. Right. I do abide by the moving average rules that we all like to live by, if we use them. 200 moving average daily or any time frame is a major figure. So it is important to watch. If I was going to do anything in this pair, I would definitely be looking to buy, simply because I see a divergence, and the divergence that I see is right here.
Oh,
right here,
okay. And that's
right
using RSI with a moving average?
correct.
What's the time frame on your moving average?
I do use a 13 moving average on the RSI.
And the standard 14-day RSI?
Actually, no, I use a 10-day
Okay.
RSI.
How'd you come up with 10? I'm always curious how people come up with, the amount of days they want to use in RSI. Why 10?
I'm the kind of person that doesn't like to wait too long for a move. I'm not afraid to take the risk when I'm going to take a trade, because I already enter with a plan beforehand. Like everybody else, I've blown up accounts. Everybody has to blow up an account or two. That's a given. Some people have to blow out 5 or 10 before they get it. That's just the way it is. But as long as you keep going, that's all that matters. Yeah, exactly. Yeah. Exactly. That's all that matters, is just keep going. You just can't stop. So the thing for me was just finding that point where I can identify a reversal to some degree. To me, that's extremely important, because I'm the kind of person that feels that can accomplish whatever he sets his mind to. I'm not the type of person that agrees with the notion that you can't time a market. I think that's bullshit. People do it all the time. I can't see why I can't do it too. And I do it. I might not be the best, but I cover my risk so I don't have to be. And that's the key.
Let me ask you this. One of my shortcomings is a tendency to be early.
I had that problem for you.
Is that yours too?
Yes, sir. I had that problem for years, and I've mitigated it by mastering the way I look at the RSI versus the market. That's been the biggest difference for me.
Okay, so you overcame it by shortening time frames, or do you put a toe in the water when you're building a position?
Correct.
Or are you all in when you?
I'm more of a quasi toe in the water kind of guy. I kind of like to use units for as an example. So say here I would be looking to take a position once this Aussie Kiwi closes above the 5, that yellow line there, that 5-day RSI.
Okay.
Right? That's something I would normally do.
Okay.
Because I want the market to close. I want it to give me confirmation that what I'm visualizing right now isn't just for right now. I want to make sure that I have some type of edge going into this trade.
Okay, so it goes to, you never know what kind of candle it is till it closes.
Exactly.
Never anticipate a candle close, because
Never ever. I've
right?
made that mistake too many times.
Yeah, I've done that. Sounds like we're kindred spirits here.
Yeah.
So you say that you like to take contrarian stances in the market. Did I hear you correctly?
Yeah, you did.
Okay, so
I like that by nature.
So let's get contrarian a little bit here, and maybe go to your long-term chart of the pairs you like to trade, Aussie yen, Euro yen, or even Euro USD. That's fine.
Yeah, let's talk about this one since everybody's
okay,
so
great.
Because,
because if you go further back, really, there you go. So
yeah, this is what I want to talk about.
Okay, beautiful.
I mean, we got multiple points of view here that just look like they're ready to keep on going.
Right.
You know, I understand it's up there in price. Sure, I understand it should be at 0. Sure, I blew out one of my first major accounts on a short Euro US dollar trade. Straight up, like 40,000 gone in like a month.
Okay.
Just trying to be short the euro, just because I knew it was worth 0. All right.
Okay.
We always know until we don't know anything because
You're a veteran. You're a veteran who's been in combat in more than one way.
That's right.
For sure. So okay, so I see like you have some bands up here. Are they bullies?
They are bullies, but there is a twist. I use a 26-day moving average, and I use a 3 sigma band. I do not use a 2 sigma band. So I'm a little different than most in that aspect. Okay. And the main reason I like to use a 3 sigma band is because 2 sigma is so basic. It's so basic. You know, it's like everybody looks at that. There's no edge in looking at that for the most part. Unless the market's going sideways, it's not really of value, in my opinion. And the reason I think that really ties the math. If Bollinger Bands are going sideways, that means that there is no volatility. I mean, that's just what it is, right? And because while there might still be a measure of volatility, the market isn't moving. It's just going up and down in between certain set of numbers. So that only gives you certain advantages. And for a person such as myself in the FX market, specifically the spot market, I'm not talking about the futures because I trade futures in a completely different manner. For the spot market itself, I like markets that trend, right? I want to see this move in the euro from 2003 to 2008 just go, right? I know to always be long when I need to be long, and I want to be able to see a pullback when there's a pullback happening. Because while this is a monthly picture, you know, we can take this monthly picture and break it down, you know, into a weekly picture.
So are you looking for a reason to be getting short euro now that we're approaching some fib retracements of the whole decline from, say?
I do not use Fibonacci's. I am a math person by default. Even before I became a math person by trait. That's what I went to school for. So don't get me wrong. I believe in Fibonacci. I know Fibonacci numbers are real to a certain extent. But when it comes to the market, I just can't go off of those lines. It's too much for me, for my eyes personally. So I just leave them be. I just follow price. And on a monthly, it's telling me I need to stay long. On the weekly, I'm also seeing the same point of view because we're just now hitting these Bollinger Bands, right? We really only hit it once yesterday, right? Yesterday's session really hit it for the first time. Today we're getting close to it. We haven't really hit it because it's 24.22 right now. That's what the Bollinger Band is giving us, and we've only reached the high of 23.82 on the spot, 0.9. So there's still room to run by approximately 40 pips, which is not small potatoes, as we know. So that could make or break plenty of people. And we're talking on a weekly time frame here. So it's not really that much, but every little bit counts if we want to keep this market going. And, you know, just because price is hitting a Bollinger Band, especially something as wide as the 3 sigma, doesn't mean it's going to stop there. As you can see at the previous time it hit it, back in May 8th, it just had a nice little pause day, had a nice kind of like wig out day the day after on the 29th, or the week after, sorry, the week of the 29th. And then it just kind of chopped sideways till I ran into this parabolic SAR here, stop and reverse. And it just kept going up. And it's going to keep going up again. That's just, I mean, we're going to at least see 125 for sure.
Yeah, I think so. I remember seeing John Bollinger talk about that when the bands pinch and compress,
they're going to expand.
They take out the higher or the lower band, that the first move, the takeout is a fake out.
Right.
And then he waits for it to get back into the band to fade it. So have you seen that type of action using your bands?
Yes, I have. I think anybody that uses Bollinger Bands has. I mean, it's damn near impossible. It happens anytime there's a big breakout. You see the same price action preceding that. Right here, we have the same situation. Right here, in the year 2014, before the euro dumped.
Right.
The second leg lower.
Yeah.
Same action.
Okay.
If we go back even further, we have a nice little squeeze right here. Right, another little squeeze right here, and we have a nice little pop there. Not something significant, but there's something there. You know, I mean, it's just the way it works. It's just the way it works. Volatility like price is ever changing, so it's hard to forecast, but it's also important to be mindful of the fact that nothing stays the same. So while I might be thinking, you know, for example, I thought bonds were going to make a big move a month ago, right? I'm dead wrong. They went the completely opposite way, and until my risk point wasn't breached, I didn't change my opinion on being long bonds. And once they got breached, then the market structure changed for me. So I had to reassess my view, and that's what I did. And now I'm the biggest bear out there. And and the funny thing is that I can completely attribute a fundamental point of view to both sides. So this is the reason we can't use that nonsense. And I started out on the street as a hedge fund analyst, as an equity analyst of all things, and in a value shop. So, you know, I've done a complete 180 in the way I look at things in the market. You have to evolve. If something isn't working, you got to change it.
If we're not growing, we're dying, buddy. So I noticed that you know, you do have a website. It doesn't look like you have a business model. What's the purpose of your website? You're just trying to pay it forward to people and just share your ideas with the public?
Yeah, for the most part. I mean, the loudest thing I've ever done on there that I think is probably the most important thing is the big dollar piece I wrote at the beginning of last year. I was very, very vocal on that. I still stand to that point of view. I mean, they just have no choice but to either destroy the dollar or destroy the dollar. They just know they have no choice. The government is broke at literally every level you can conceive of, from the lowest municipal level to the federal level. So, you know, if we want to get into the fundamentals, we can, but I don't trade off of that.
Okay, so we have to debase to survive all the debt that we have, and
yeah, I mean, it's 20 trillion that we can count on. You know, there's tens of trillions that we can't see. You know, that's a fact. You know, this is not an opinion, because as we saw in the 2008 crisis, these banks can hide anything off the books. It just doesn't matter. It doesn't. So any number that you hear being exposed, you can multiply that bad boy by at least 2 to 3. That's a guarantee. I'm going with 50 trillion. So
Okay.
I'm guessing that there's probably 50 to 70 trillion out there just sitting around. I mean, no NPLs have been cleared. All the old debt is still sitting on the books. I mean, it's ridiculous. It's ridiculous. It's ridiculous.
So are you gonna stay in the U.S. and ride this out? Do you think eventually we have some type of major economic crisis?
Yeah, I mean, this country isn't, you know, people are too sensitive. Everything bothers everybody. The environment is too hot. You know, everybody. I mean, it's for real. Everybody's getting squeezed in every direction. It's getting squeezed in their pockets. They're getting squeezed in their living space. They're getting squeezed in what they can say. They're getting squeezed in the way to think. I mean, it's a squeeze all over. You know, that's just creating a boiling pot. That's not, you know, all this progressive nonsense. It's not to get political, but it's just gonna not lead to anything positive. It's just it's not going to, because they're not about sharing ideas. They're about imposing their own ideas. And that's the problem. You know, people have to just shut up, mind the freaking business, and let everybody live the life they want to live. It's not anybody's business to impose anything on anybody else. Period. That's my point of view on life. I don't walk around bugging people, telling them what to think. I just point out the facts. My Twitter feed is nothing but facts. You don't gotta like it. You just gotta live with it. That's all.
Well, I'll tell you what.
Go ahead.
I respect your strength and your confidence. You're now my trading warrior brother, and I would trade in the foxhole next to you any day, Q. So
much appreciated, Dale.
Really a pleasure meeting you, and keep up the great work of hitting people in the face with a dose of reality, and keep in touch with me. Perhaps we could do it again, and let me know down the road if your attitude about the dollar or anything changes, and perhaps we can do this again, do a rerun, a repeat.
Sounds good, Dale.
Later this spring, early summer.
Sounds good.
All right, my friend. So everyone think @Bonskew, that's where you could follow him. If you want to show your website, you could do it now too, buddy.
No, it's all good. People can hit it up on the Twitter profile. It's on there.
Okay, buddy. So thank you very much for your time today. Good hunting. I hope 2018 is a great year, and not just in trading, but in every way for you.
Same to you all. Thank you very much for having me on again. Appreciate it, guys.
Okay. Pleasure meeting you. Okay, everybody. We'll see you tomorrow. That's it for today. Good hunting. Remember, don't just count your pips, count your blessings. And the dollar is down. If you see commercials for McDonald's about a weak dollar, cover your shorts. I'll talk to you later. See everyone tomorrow. Thanks again, Stu.
No problem. Have a good one, guys.
Don't just count your pips, count your blessings. See everyone tomorrow.